Okay, let's talk about AI. The conversation around it is just hitting a boiling point. I mean, on one side, you've got people shouting, bubble, right? They're comparing this whole frenzy to every single tech boom that's ever gone bust. But on the other side, you've got this deep conviction that we are on the verge of a revolution so massive, most of us can't even begin to wrap our heads around it. So what is it? A bubble or the real deal? To figure that out, we gotta follow the money, and a story that has Wall Street completely stumped.
And at the very center of this whole debate is this one pretty wild question. What if a 23-year-old genuinely knows more than all of Wall Street combined? We're talking about a guy named Leopold Aschenbrenner. He's a former researcher at OpenAI, and he's got this core belief that he, along with just a handful of other people, can see a future that the entire financial world is blind to.
And look, this isn't just some theory he's writing about in a blog post. He has put his money where his mouth is. He started a brand new hedge fund and raised this much, $1.5 billion. He raised it in what felt like the blink of an eye, all to make one massive bet on his very specific vision of the future.
So, how's that bet going? Well, in just the first half of the year, his fund was up a jaw-dropping 47%, and that's after fees. I mean, that absolutely crushes the S&P 500 to 6% return and just leaves all the other big-shot tech hedge funds in the dust. So the billion-dollar question, or I guess the $1.5 billion question, is how?
All right, so that brings us to our first section here, Wall Street's $1.5 billion mystery. Because the story of this fund, it's not just about the incredible returns. It's about the single powerful idea that's making it all happen.
And that idea is something he calls situational awareness. Aschenbrenner actually wrote this massive, 165-page thesis laying it all out. And his core argument is this. There are maybe a few hundred people on the entire planet, mostly the folks working inside the big AI labs, who truly get what's about to happen with artificial general intelligence, or AGI. You know, AI that can reason and learn and basically operate at or even way beyond human levels. And his prediction is, well, it's pretty extreme. He straight up says that by the end of this decade, these machines will be smarter than us. He believes the race to AGI has already started, and that while everybody's talking about AI, almost no one has the faintest clue what's really coming. And that powerful conviction, that's the secret sauce.
Okay, so you have this really out there cosmic prediction. How in the world do you turn that into a practical investment strategy that actually makes money? Well, that brings us to our second section, the situational awareness bet. The strategy itself is surprisingly simple when you break it down. First, you do the classic gold rush play. You buy the picks and shovels. In this case, that means semiconductor companies and all the power infrastructure you need to run these giant AI models. Second, you get direct exposure by investing in key AI startups. And third, you short, or bet against, the old guard industries that you believe AI is about to make obsolete.
But hang on a second. Anytime you see this much hype, this much money moving this fast, a lot of seasoned investors get really nervous. Which leads us to the huge counterargument. Is this whole thing just another tech bubble that's waiting to pop?
You know, the skeptics have seen this movie before. They draw a straight line from what's happening in AI today right back to past manias. Think about Web 2.0, where tons of venture capital money was just subsidizing user growth. Or crypto, where all these token rewards were creating usage that wasn't even real. The common thread? It's always some outside source of cash creating an illusion of success.
Antonio Garcia Martinez just nails this skeptical view. The theory goes that today's AI boom is being fueled by venture capital that's paying for the insane costs of computing power. It makes these AI products seem artificially cheap, which gooses the usage numbers. And the fear is, just like every other bubble, eventually the whole thing is going to blow up.
Okay, so that's the bubble argument. But is that comparison really fair? Let's dig into the evidence that suggests maybe this time really is different. The entire rebuttal, the whole argument for why this isn't just another bubble, it all comes down to one single powerful word: demand. The point is that unlike past bubbles, the demand for AI isn't fake. It's not an illusion. It is real, it's organic, and it is absolutely ravenous. And you can literally see this demand in the physical world. This isn't just some code floating around in the cloud. We are in the middle of a massive, real-world construction boom. Just look at this. Spending on building new data centers now almost equals all the spending on building new offices. That is a staggering amount of steel and concrete and investment.
Now let's talk about actual usage. In the month of July alone, Google processed 980 trillion tokens. Now, a token is basically a piece of a word. It's how we measure how much info these AIs are crunching. And that number is just so big, it's hard to even comprehend. But here is the truly insane part. That 980 trillion figure, that was up from 480 trillion just 2 months earlier, in May. That is 104% growth in 2 months. This isn't some gentle adoption curve. This is a vertical rocket ship of demand.
So this brings us to the fundamental difference, right? The argument isn't that AI is cheap. We know the costs are astronomical. The real point is that customers, real paying customers, want as much of it as they can possibly get their hands on, almost no matter the price. And that is a totally different dynamic than past bubbles, which were almost always fueled by stuff being artificially cheap.
And look, this intense, explosive demand, it isn't just some abstract economic force. It is creating a brand new and frankly pretty unforgiving market reality. We're already seeing clear winners and clear losers emerge.
Bank of America put out a list of companies they think are most at risk. And it's not the companies you might think. We're not talking about old legacy businesses. We're talking about the tech darlings of the last decade. Companies like Wix, Shutterstock, even giants like Adobe. Their entire business models are suddenly being threatened by AI that can do what they do, but faster and way, way cheaper.
And the market is definitely taking notice. Take Gartner, the big research firm. A little while ago, they cut their revenue forecast, and they specifically blamed AI disruption. Their stock plunged 30% in 5 days. Investors are actively running away from companies they think are on the wrong side of this shift.
This quote from Adam Saran of 50 Park Investments just puts it so bluntly. Any company where you're paying someone to do something that AI can do faster and cheaper will be wiped out. I mean, the implication there is that entire industries could just disappear.
So when you step back and you look at all the evidence, the insane infrastructure build-out, the explosive organic demand, and the market disruption that's already happening, it gets really hard to just dismiss this as another tech bubble. The AI revolution, it's here. It's happening now. So the only real question left is, are you on the right side of it?